Good morning, pre-market prep, and a happy Monday to all of the pre-market fam out there. Hope everyone had a nice, kind of late April weekend. We're going to get things kicked off here on Wall Street. We do have S&P 500 futures kind of trading unchanged here. We'll get a real quick, because we're kind of sick of talking about the Middle East conflict. We'll get a real quick update on the Middle East conflict. We're going to talk about probably the big news item coming into this week on Wall Street. We have a rumor that OpenAI could be designing a phone. We have Apple shares potentially reacting to that. Is OpenAI talking with some Apple suppliers to do some kind of smartphone? We'll talk a little bit about that. Qualcomm, one of the implications there, and we're going to talk about Qualcomm a little bit also today. Earnings this morning so far, as we are kicking off the heart of the earnings season. We already got Verizon and Domino's. We'll get you a preview for a few of the other major earnings reports happening this week. Apple on Thursday. A few rating changes here this morning, including a downgrade on AMD, an upgrade on CrowdStrike, and another one in the software space there, Adobe. Also, our guest today at 8:35 a.m. Eastern Time is Tim Quast from Market Structure Edge. We'll see how Tim's weekend was. Folks, let's get it going here on Monday's pre-market prep episode. Here we go.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right. Good morning, traders and investors. These charts, folks, are brought to you by TradeStation. Born to trade, chart, analyze, customize, all in one platform. I do have the SPY on screen right now. You can see it's trading up under 0.1%. Let's take a look at crude oil and the USO trading up 0.4%. Right around 133 133 on the USO. Let's take a real quick look at gold, and we will welcome Triple D in just a sec. And I'm going to look over at the STN news feed and see if there is any breaking news. Triple D is checking in a little early. How's your morning going, Triple D? How's
What's
your
going on,
weekend?
Brentster? How are you, buddy?
I'm doing well. How you doing?
Tired. What's
Tired.
going to be the good news when the Oilers get knocked out in the next game because they're getting knocked out? I don't have to stay up late watching all these games.
Tough go.
Yeah,
as an Oilers
fan?
What?
They're just too hurt. They're too injured. They don't look good. McDavid doesn't look like McDavid. Dreisaitel's okay, but he's hurt too. Hyman, all the better players are hurt. So you're looking at this and you're like, this is just not our year. And this Ducks team is exciting. They're young. They're good. The Cutter Gauthier, man, is a great player. This team's coming. This team's a good team. So you know what? It's the goal. I saw the goal last night. Is it a goal? Is it not a goal? It looked like a goal to me. So not going to complain about it. But when you stay up that late watching these games, it makes for a tired pre-market show. So that's the good news. Only probably one game left for the Oilers, I think, and then I won't have to be up till 1 o'clock in the morning.
Bearish on Oilers, bullish on NHL playoff hockey, though. Good playoffs, you think?
Yeah, that's been pretty exciting so far. I mean, not a lot of surprises here. Carolina, Colorado. We better not go too deep into hockey here because we'll lose all our listeners here. So let's go into. We'll get a quick Middle East update. We're doing like 30 seconds. Iran has said to offer U.S. a deal to reopen the Hormuz. And they're saying talks, no talks. Trump saying again. He was on 60 Minutes last night. There's going to be a great deal happening soon. I mean, it's just the same stuff. The market is numb to it all. The market doesn't even listen anymore. So at this point in time, I mean, the S&Ps continue to roll because of AI, and the USO is not far from the highs, but the S&Ps don't care anymore. The S&Ps are like, AI is driving the bus, and I mean driving the bus massively here. We're going to get to the Apple news here in just a second here, but just talking about the AI hardware trade. Micron, which I did buy for a swing trade there on the STN room last Thursday, trading up 3.3%. SanDisk up 2.57%. I mean, the same stocks just continue to go. Seagate, which we talked about this one in the STN think tank, reports on Tuesday. Great weekend trade, trading up 2.26%, one of my biggest winners on the day. It's just, hardware. But then you think like, well, Apple's hardware, and I've argued Apple's hardware before. Well, we had a little headline here that's got Apple investors spooked here. Give us the details, Mr. Brent Slava.
All right, let me pull up a little tweet that Michael Feehan saw. Thank you, Michael Feehan. I think it was a WSJ report, but we'll use this tweet here. OpenAI set to redefine smartphones, MediaTek, Qualcomm, and Luxshare key to its AI agent phone. Basically, OpenAI reaching out to some Apple suppliers and going like, hey, you guys interested to maybe entertain? We're sort of thinking about making some kind of AI phone. And of course it would go in this direction. Is anyone like, we're kind of surprised maybe that OpenAI is considering something with a phone, but also where is the most computing power access for a human? It's in your pocket. It's your phone. So why wouldn't they try to leverage this category of consumer electronics?
I mean, that would be terrible news if OpenAI starts creating a phone, or Anthropic goes further and they start to get into it too. I mean, it's what I've been saying for a long time. I think AI eventually just disrupts everything. So it's a matter of like just timing, and now we're looking at trying to disrupt hardware here. OpenAI has only been disrupting software the whole time. Now all of a sudden, there's rumors of a phone and disruption of hardware, is starting here as well. So that's an issue for our overall investors. It's an issue for Apple here this morning. Let's start with the technicals on Apple. Joel Elconin will be back. He's back tomorrow or the next day?
He is back Thursday or Friday, I believe.
Oh, gosh. Okay. So, warning Will Robinson to the overall market there, too. But, I mean, Apple trading down $4.50 here this morning. Is this just another buy the dip opportunity? Is this just, rumors here? Nothing's going to materialize of it. I don't know. It's scary when your stock is trading 30 times earnings. Like I had Apple. I put it in the long-term portfolio there about 3 months ago. And then I'm like, you know what? I'm just spooked on it. I don't know. And then it is still 30 times earnings. I think this one's just too hard. So do they buy the dip on Apple? Maybe. But, this is not as cheap as some of the other ones. And I mean, if they start thinking of it like as a potential disruption, we know what's happened to software. So I think I this one out and see what happens today. So, if you're just doing support trends, the trend, media trend's been up. 260 is a logical bounce point, but it's a long ways down from
60. Yeah.
You'd look at, last week's low, 265.40 as a possible bounce area, and that makes sense as well. If you're a technical trader, it looks like that's where it's trying to find support in the pre-market as well, 265.40. But overall, I think this one's too difficult. So sometimes just take a pass. That's what I'm doing on Apple.
Pretty clean, like technical setup here. I like the nice round numbers, and not that 266 isn't a nice round number, but it's it's a little off the mark. But yeah, 266 this morning. And then, I kind of like that level that you were pointing at too, around 260 down here. Triple D, kind of clean.
I'm laying off because I want to see what happens here, because this is a spooky headline if you're an investor. So we got to just, when you get these headlines, let's see what happens when the real money comes in at 9:30. Because right now it's basically just retail pricing it. So let's see if there's an institutional investor coming in saying, oh, we need to buy dips and we're coming in, or is there an institutional investor that says, hey, maybe I want to take caution here. Now, the one stock they're not taking caution on here this morning is the stock that's benefiting from them, because the rumor has OpenAI approaching Qualcomm. So, to obviously, maybe supply parts for a potential OpenAI phone. Qualcomm trading up 17 points here this morning. I do have Qualcomm in the long-term portfolio. We talked about this one in the STN Think Tank on Friday. And I was talking about the gap up, and people were like, you trading this? I was like, this feels different this time, is what I was saying. With, I'm like, I even said in the STN Think Tank, and some of you who are in there can verify this, I said, could Qualcomm be a sneaky hardware catch-up trade? Boom. You get a headline the next trading day, up 17 points, and now people are saying, whoa, maybe, just maybe, this beaten down stock, which is trading like 12 or 13 times earnings and makes parts for hardware, as a hardware company, is not getting any love. Maybe all of a sudden, you get a headline with OpenAI. Now you're getting some love here. So interesting. I'll be holding on to my Qualcomm shares, up 11% here this morning. It's a big pop. Does give some of it back. Qualcomm, is one that, tends to give it back. It's never been great. But I feel like still this is like a potential like sneaky hardware play. So I'm not selling.
Yeah, and we've had this little intersection here where just like separate from hardware, separate from software, there's been a laggard trade. And guess what? Qualcomm has been one of those ones. So like, Dennis, you've not only did you highlight Qualcomm just last week on Thursday or Friday, but you've been highlighting the laggard trade in general. And now here we have a little bit of an intersection of a hardware name and the laggard trade. So yeah, I think that, there's some interesting things to consider here in Qualcomm. And I'll pull
and I mean, it's just about like, analyzing. And again, maybe we're combing the ditches here a bit because Qualcomm, hadn't been participating. Qualcomm's been hated for a very long time. But it just felt different. Like the Friday trade felt different. It wasn't like sellers, so it gapped up. I don't even remember what the news was on Friday. Do you remember what the news was? I'm sorry, forgetting because it's been so long ago. It feels like Friday, but if we go back.
Let me see if I can refresh my memory.
See if we cut it down, but it just felt different. It felt like I was like, people, are you fading the Qualcomm? And I was like, I'm not, because I feel like it's a little bit different this time, and I don't know what it was.
I think we just think Qualcomm was up with the hardware and Intel. I think we just thought Qualcomm was up with Intel.
Yeah, with Intel. Maybe that's what it
makes
was.
Sense, right?
Intel earnings. Yeah, because I was looking through the news feed as well to see what that was.
But again, the laggard trade. Like there's been a lot of moments where Qualcomm has not participated with a name like Apple, but it just felt like on Friday, Thursday night on Friday, it felt like Qualcomm was participating with Apple now. We don't
well
a lot
with
of
Intel,
times,
with hardware.
With hardware.
With hardware, because
a lot of the times we don't care why. A lot of the times the most important thing is that you notice two stocks are correlating or not correlating.
Well, it's everything. I mean, I'm all about relationships. I'm all about, looking at, what's moving. And I mean, Qualcomm is clearly hardware. I think it just hasn't gotten any love from the street for a long time here. So now it's getting some love. So I do think on dips, investors are going to start thinking about this stock here again. So I'm going to stay long. Would I buy more on dips? Maybe. I'm comfortably long, but would I be interested if I didn't own it on a dip? I think so. I mean, the valuation is quite reasonable here. I mean, it's been a laggard for a long time, but I mean, we are in a market where hardware stocks are, just killing it. I mean, people were asking, oh my God, you're buying Micron now? And I'm like, well, it looks like it's breaking out to me. I mean, that's like, so I was setting it up and Joel was challenging me too in the think tank. When I bought it at 480, I bought it at 480 last week. And I'm like, it looks like a classic breakout to me. And it's a breakout on a hardware name. Those are the kind of breakouts that I want to be buying. Software, challenging that. I'm like, I'm scared of software, but buying breakouts on hardware, that's been working. So that's where I'm at, with the hardware trade. If you've been listening to the show for the past 4 months, it's what I keep preaching. I'm going to keep preaching it until it doesn't work.
Qualcomm trading around 13, 14 times forward PE. You are intrigued by that valuation, Triple?
Yeah, it's cheap. They're cheap. So, but it's been cheap for a long time. But if we start thinking about other hardware names, and I mean, if there's this is still just a rumor, but if there's anything, to come from this rumor here, well, then, rumor on confirmation. I mean, we've just seen, when the hardware stocks start. I mean, look at Marvell. I mean, Marvell was a dog. We got to give intern in the STN think tank full marks on this one, because he's like, this is a hardware play too. And this was back when the stock was $85. March, still 85, hangs out for a bit, and then bang, we start breaking out through 100. Here we are a month later, $164. They just seems like the hardware, it's like cycling bull markets where they come in and they like these hardware names, and they're buying these ones, and then they find some other ones there. The exact opposite of what's happening in software, where you have, Adobe getting downgraded today. We can talk about that in Think Tank too. Can't get off the lows. I mean, they did a buyback, $25 billion last week. Set everything right. They don't care. Why? Because it's software. It is, we are totally in software versus hardware. And I'm not sure what changes that narrative for investors and for the institutional investors, because they're spooked. They're spooked that there is a disruption coming, something fierce. And, we believe it too. We've been talking about this. I think the disruption is real.
Any other hardware or software names to pause here real quick as we're getting the week started and just take a glance at? You naturally went to Marvell. Are there any other?
Well, Applied Materials is breaking out here again through 400, rounding bottom. We were sitting there. But, if you're trading Micron, you're trading SanDisk, they all kind of tend to move together here. Yeah. Seagate's going to report on Tuesday. They're probably going to blow it away. So does it have a high bar because this ran from 400 to 600? Maybe, but that doesn't mean it's not going to run up ahead of the report here too, Brentster, because we've seen this. That's why I went long Seagate over the weekend, and it's up 2.3%. I mean, this is just the stocks that people want. So it's all about the trend. The trend is your friend, and I mean the trend on all these names is and we're going to get more reports here and the big five. So it's hard to predict where the market is going overall here when you're looking at Microsoft, Amazon, Google, and Meta all reporting on Wednesday and Apple on Thursday. But the trend is still your friend here, and hardware just continues to be hot as hell.
Do you want to just go to do a little earnings preview here while you brought it up?
Why don't we can do that first, and then we can touch on the earnings. We had two companies before. Yeah, let's do the earnings preview because we're touching on it here right now. Bring up the calendar. Fee does such a great job with the calendars here. And I mean, tonight we get Rambus. There's another hardware name. RMBS, has just been blasting off. So I mean, it's again these rotating. Marvell started going the same time Rambus started going. Broke out, was kind of in a little bit of ugly, obviously with everything ugly back at the end of March. But I mean, what did they come for? Really, when the markets turned here and decided we don't care about the Iran war anymore, and now we don't care about oil anymore, we just care about going higher. What was the driver here? It was all the hardware names. And here we are again, another hardware name, Marvell, up 60% in 3 weeks. Like it is overextended for sure. But here, as a company, it's going to report here tonight. Is there a high bar? Yes. But you think if it dips, there's money managers saying, I'd love to buy a dip on a hardware name? Probably. So there's probably underneath demand here in RMBS, and that one reports tonight. Like I'm just cherry picking, and this is what you got to do. You look through your earnings calendar, you cherry pick the ones they're going to love and the ones they're going to hate. I mean, I look at STX. If that thing has a dip on Tuesday, they're going to report on Tuesday morning or Tuesday night. Can't see right on my eyes. There it is, Tuesday night. I mean, there's another one that they probably are going to buy the dips on. Teradyne, same thing, breaking out. Are the bars high? Yeah. Do I want to own them into the report? No, but I like being stocks long ahead of the reports. And if they dip after the reports, am I interested? Yes, because these stocks are just in favor, big time here. Teradyne. Bloom Energy is on Tuesday that reports, and it's just nuclear and all these hardware and all this AI trade needs power. Bloom Energy has been the loved one, for a very long time here too. So does it have a high bar? Indeed. Am I going to hold it into the report? Probably not. But if it dipped after the report, would I be interested? Yes, because it's a hardware name. So again, buying dips on stocks in long-term uptrends and selling rips on stocks in long-term downtrends, that continues to work. We get into Wednesday, if we want to continue this earnings preview for a couple of minutes here, because we do have some time. Microsoft, different story. Like you come in here and you're like, the S&Ps are flat. What are we already seeing here this morning? IGV down 0.66%, and there's the semis up 1.22%. So you literally have a 2% separation here again.
Wow.
After, the outperformance has just been unbelievable here. You have IGV, gets a good couple days, a week or two, rising tide lifts all ships when the market's going higher, but then right back down. I mean, IGV, which is full of software names, obviously, it's what it is. Started the year around 107. It's $84. This is not rocket science to tell you that the stock is in a hardcore downtrend here. And does it fundamentally make sense? Sometimes I'll be like, if it doesn't fundamentally make sense, maybe I'm going to be buying the dip on this. No, it does fundamentally make sense because it's getting disrupted. So, you look at Microsoft going to report on Wednesday. Is the bar low? Yeah. Could the stock rally? Yeah. But we also saw ServiceNow with a low bar, and actually report okay, and they still sold it anyways. We saw IBM last week with a low bar. Reports okay, they sell it anyways. They don't want consulting, they don't want software, and I don't know what changes that narrative.
Yeah.
It seems like that is like the theme of the year. If you eliminate the war trade and eliminate all the Trump tweets, the underlying theme here is still hardware versus software, hardware driving the bus, software continuously underperforming.
I think you're even kind of understating the ServiceNow and the IBM results, because don't forget that they reported a fine quarter, they beat, and not only did they sell the stock, but it started SaaSpocalypse 2.0.
Yeah. I mean, it did. And IGV, didn't really recover on Friday. So if the S&Ps recovers, makes new all-time highs, IGV sits there and then stuck in the mud. And you get a day that's flat, it's down. You get a day that goes up a bit, it's hard to go up. The money managers just hate these stocks, which, maybe we'll go out of order here, but we'll go to Adobe here this morning, just to give you examples here. Mizuho downgrades Adobe to neutral, and their analyst is lowering his price target from 315 to 270. Analyst comments. So they're even selling the rip. Here's an analyst that had an outperform, and they're like cleaning their books up and saying, no, look, we can see what's happening here. This is not rocket science. The analyst comments, we have grown more cautious on Adobe since last October when we highlighted competitive threats in our thematic AI report, but wrongly held off downgrading given what appears to be a compelling valuation. I mean, I love that they're owning it. I love that they said, that we didn't downgrade it. We were saying cautious, but we didn't downgrade it. And I love that they're owning that they didn't downgrade it. They used the recent strength from the last few days to obviously downgrade the stock. And here it is, down another $4. I mean, you can't rally on a $25 billion buyback announcement like nothing. That's telling you that this stock has real problems. You can't rally on a pretty, did they report earnings too? I can't remember if they did. I feel like they did. I feel like we talked about it for two reasons. I feel like they did the $25 billion buyback, and I feel like they reported or guided in it, maybe.
No, just the buyback.
Just the buyback.
Yep. Yeah.
Yeah. So they're coming in saying, the market is wrong. That's why they're doing a $25 billion buyback. But maybe they're wrong. So this analyst is jumping off the Adobe bandwagon here this morning, and you know what? I do not blame them whatsoever.
We did not actually talk about this, Dennis, but Adobe is about $100 billion market cap. That's the $25 billion buyback. Obviously, 25% of their total market cap. That is absolutely massive.
A huge buyback.
I don't know if I've ever seen a bigger buyback. Now that I'm thinking about it and thinking about the percentage as proportion as market cap, that might literally be the biggest buyback I've ever heard of.
And under all that, the market says no, thank you. Whoa. I mean, if that's not a red flag, I don't know what is.
At the same
this
time,
trend is awful. This Adobe chart, you can just go out. You can just take it to the technicals, and I'm not always the biggest fan of technicals, but in some cases, it's telling the complete story. 2024, this was $578. It's $241, and people can look at the valuation, say it's attractive, but they can also say, holy crap, this stock is just ripe for AI disruption. You have analysts saying it now. We've been saying it here too. I mean, when your stock can't rally on anything, not even $25 billion buyback, it's telling you it wants to go lower.
Let's go back to the calendar here for just a sec. We'll keep the earnings preview parade going. Had a quick little sidetrack there to see what's up with Adobe. I want to just mention also Wednesday. I feel like we would be remiss not to mention that SoFi is Wednesday morning. Generac, I think you were kind of interested in, is also Wednesday morning. And then Wednesday afternoon, of course, Microsoft, Meta, Google, Amazon, Qualcomm, Ford, Carvana, a whole bunch more besides what is being shown on the highlights here on the calendar.
Just rate lists. Trading right now is all about lists. Hardware, energy, software, non-AI. Kind of have your list going here. I mean, Generac, you just mentioned, it's a power play. I mean, it's potentially an energy play. There's, you're going to have to back up these, data centers that we're building like crazy here. So I think there's, Generac, I like it. I'm long it. I'm going to stay long it here. You could go to a stock, just on the opposite end of the spectrum. Etsy's had a pretty good run here as of late, but SoFi, these stocks have kind of been out of favor here now. Yes, SoFi, has had a pretty good few weeks here, but we can see, fintech here, where the stock has come from, $33 now down to 18. Is it a great buying opportunity, or is it ripe for disruption here too? I mean, the market's telling you it's concerned about disruption, or the stock will be trading a lot higher. When your stock's 50% off the highs or 40% off the highs, recent highs, and the S&Ps are at all-time highs, telling you the market doesn't like your stock. I mean, this market right now, it's just separating stocks into two categories: AI beneficiaries and AI potentially being disrupted. You don't want to be in column B. SoFi, I think, unfortunately, is in column B.
SoFi, for better or for worse, has just turned out to be in my opinion, the speculator's stock. So also keep that in mind. It's kind of I would say, the retail darling. I would say
it's one of them for
one,
sure.
Palantir's number 2, maybe Robinhood's number 3.
Well, and you look at some of those and you say, look at Palantir's chart. Same thing. I mean, we've had a war. We've had a lot of things. We had Trump coming out and literally typing the ticker symbol and pumping the stock here. Yet the stock can't get stuck out of the mud. So when you look at the technicals here, especially on this clean chart that you're showing here right now, Brentster, clearly under that moving average, looks like it's consolidating under that moving average. Unfortunately, it looks like it's consolidating. To me, it looks like it's consolidating to go lower. It is grouped in IGV, even though I don't even know it's part of it. It's been, kind of, grouped in the hardware trade here. So unfortunately, I think this one here falls into column B. So I think it's that simple. I think we're still column A, column B, and if we're going to be rising up to, new highs, you need your stocks to be like breaking out and starting to show life.
Yeah.
Palantir is showing no life at all in the charts. And if the stock market starts to roll over, this will be a stock that leads the charge down, I believe.
You want to do, we're going to get Tim Quast in probably like 5-10 minutes or so.
Sure.
Want to do a couple of our earnings reports from this morning, including, why don't we take a look, just a little stop here at Verizon, which is trading up a decent like 3 or 4%. It looked like at first glance, it looked like a pretty strong report. They beat on the bottom line $1.28 in earnings. Analysts were around $1.20. I do see maybe a modest miss on the top line, but they raised modestly their 2026 earnings guidance. They're expecting now $4.95 to $4.99, a pretty tight range there. Analysts are around $4.90. The previous guidance was about 5 cents lower. So Verizon beating on the bottom line and raising their yearly guidance.
Trades, just 1 second as we get dinged here on the markets again. Trades more as a bond. AT&T and Verizon have done that. Not that they're the same businesses here, but communications networks and looking at stuff like this. I mean, did you see the charter move on Friday? CHTR. This was an incredible collapse, CHTR. So it's quietly didn't get any love because nobody really cares about charter. Well, that was something. So, I mean, this was a huge move to the downside. And then Comcast, which had a great day on Thursday, gives it all back and more on Friday, just following charter. So, kind of the cord. Obviously, charter, Comcast a little more than Verizon here because they obviously have the huge mobile business, but I just don't know. This is where I'm 5.9%. I'm like, I just can't get interested here. I just don't think it's like, and is there AI disruption here happening? Probably not. But this is, we're breaking out into bull markets here. This is also not the kind of stock that I think is going to be rip roaring higher. So I probably would fade the pop here this morning.
Well, so what bucket does a communications or a cable company like Charter or Comcast fall in? Is it software? Is it hardware? Go. What do you think?
Well, here's something. So when we're talking technology companies, not every stock has to fall into a bucket. I mean, you can go say General Mills. Is it hardware or software? It's not. So, I mean, you can go AT&T and Verizon. They're supporting, obviously, big mobile businesses. They're supporting hardware. Could they benefit from a little column A, column B? Yeah. I don't think you can simplify Verizon into those buckets. Some technology companies, you can clearly say, this is hardware, this is software. And then you can kind of say there's a mix here. So, I mean, I don't know, if I'm doing that at all. I think Verizon and AT&T just literally traded with bonds. If interest rates start to, longer-term interest rates start to come higher, obviously, that's, benefits and, the opposite occurs as well. So just look at the TLT. TLT starts to break out, where we start to see interest rates go lower here. That could be good. Sorry, I said it backwards. And that would probably be good for Verizon and AT&T. So they trade more with the TLT than anything else.
Yeah, that's exactly why I asked the question that way. So I'm glad you responded to it that way. How about another exciting earnings report from this morning? Domino's Pizza, folks. DPZ, pulling up the chart here in just a sec. Company shares trading down about 6%. They just missed straight up. They missed on the bottom line. They missed on the top line. Earnings of $4.13. I see analysts were up closer to $4.30. I see sales of $1.15 billion. Analysts were up at $1.16 billion. Again, they announced a pretty decent sized buyback, about $1 billion, and they are adding to their current buyback plan. So, a crappy report, a nice buyback here for Domino's cannot save it from a bit of a crappy report.
It's just simple, Simon. Again, stocks in a downtrend from the last 2 years. If you're buying dips on stocks and downtrends, it has been working. You're buying dips on stocks and overall uptrends here. So this is a dip I probably lay off. Doesn't mean nothing works 100% of the time. There is good support down here, right where it's trading right now. The low is back from April 346. I think it could bounce at this level. I think it's important that it bounces at this level if it's going to bounce here. But I think it's I think it's simpler trades out there. So I don't want to make it hard. Yeah. This is not a clean setup. But again, if you want it for a day trade, that's where it needs to bounce to 346.
Triple D, we have couple minutes here before we're going to get Tim Quast. We were going to almost have Blue on today. Blue was going to kind of stop by and see how we were doing and just give us a little preview ahead of the Fed meeting, which is Wednesday. We are going to be getting a Fed interest rate decision on April 29th. That is Wednesday. But Blue was like, the Fed's not going to do anything. One. And two, what I would like to talk about with the Fed is like evergreen. He wants to talk about Warsh and Warsh coming in. So we're going to get Blue back for next week. But any other like econ-y stuff, higher, like kind of macro zoomed out stuff on your radar for this week, Triple D?
Well, bring up the calendar there because Fee always puts the economics there right there.
Oh,
so, we might as well talk about, what's the reports happening here this week here. So if you can grab that,
incoming.
Again, is this the market that's really concerned about, economic data here right now? No, it's all ramped up on AI. So, I mean, that continues to be the case. That's what it's ramped up on. It's what it likes. Yeah. It's what it's going to continue to be. So, I mean, these stocks aren't, really impacted by economic data nearly as much as some other things. But, PCE, GDP, initial jobless claims. It's all stuff here that, I mean, but it's not like a week where we're getting a CPI report and everybody's going to be like, holy crap, this is really this market. And we've been talking about this too, Brentster and the STN think tank. Like this market always cares about the CPI, and all other economic data is kind of taking a back seat here. Like even when we get ADP tomorrow here, it was moving the markets a while ago. This market's just not interested in that right now. The market's interested in the next OpenAI Anthropic headline. And, that's pretty much it. It's all about AI right now because even the Trump headlines here, it's numb to them too. So this market is now fully running on AI, what's getting disrupted and what's not. And I think, honestly, the economic data is taking a backseat right now.
Totally.
Tim Quast will be coming on here 3 minutes here. A couple other things just, on my radar here too, as I look through. Obviously, there's lots of earnings reports. There's lots happening on this week here. You got to look at the drugs and you got to look at, we had a lot of biotech news here this morning. XBI is trading up a little bit here. I mean, the XBI weekend trade slightly working, not fantastically, but the S&Ps are down, the XBI is up. There was multiple headlines here, many of them coming from Adam Feuerstein, who's a great follow on Twitter. If you don't follow him, NTLA had some results. There was a small Lilly was buying somebody else as well.
Yeah, I mean, we should that just
cover because it seems like Lilly is just on a shopping spree. It seems like every other Monday, Lilly is acquiring another company here. So Lilly to acquire Ajax Therapeutics for up to $2.3 billion. I believe this company is a private company here, so it's not going to be, impacting like the XBI as much. But Lilly is full on a shopping spree here. And I don't know, like they've got a lot of money, obviously, from, their weight loss drugs here, and they're looking to spend.
And
what does that mean? Does that continue to keep biotechs in favor? I mean, it's always hard to like pick the stock that's going to get taken over. But, it seems like, I'm going to continue to play that weekend trade with the XBI because it seems like every weekend we come in, there's, if there's, maybe there's not one today, but there seems to be, that opportunity for there to be one in there, and you get exposure to a bunch of them by being long in the XBI. And these deals often do get down on Monday mornings. I mean, this is, XBI in itself, which has nothing to do with the AI trade whatsoever, is clearly in an uptrend. Clearly been strong. Didn't even want to sell off with the war trade, for like really, March, April was not bad for the XBI at all. So, I mean, is this the turnaround story, for biotechs here? I think so. I mean, 2020, we had $174 and the XBI has been garbage for a long time. Started, showing life here middle of last year, and now we're ramping it up. I mean, how does AI affect, you could go into that. How does AI affect, these smaller biotech names? Probably benefits, like to a certain extent. Like, you could reach and say, oh, it's going to be disruption because AI, in certain ways it could disrupt as well. But you think about research and you think about XBI putting, like here's the AI, like I think it is an AI play because you think about like smaller biotechs, having obviously paid so much for research and development. If they can utilize AI as tools, and AI to help them with their research and development, they could get some of those costs down. But not only that, AI could maybe get them quicker to finding, potential, new drugs, potential cures for new diseases here. So, if you think AI eventually could cure cancer, XBI is probably a direct beneficiary of that. So, you know what? I'm going to today, for the first time, put XBI in the AI bucket.
Oh,
I'm long XBI. I'm going to remain long XBI, and I'd be buying the XBI on dips.
That's a call. It's a call, Triple D. That's a call you're making right here, right now.
And maybe I'm not thinking it all the way through. I'm just kind of thinking out loud here, but I just feel like I do believe there's going to be a lot. Like we can talk about disruption and jobs. We can talk about the negatives. There's going to be a lot of positives with AI, Brent. There's going to be a lot of cool things, new products, new things. But you know what? New drugs too, because you've got like AI that's going to be able to think like all of these other biotech researchers here, utilizing all the data all at the same time and building on everybody else's research here. So I think so. I think there's that potential for AI to benefit the biotech sector overall.
One more we might want to get on traders' radars here this morning, and I'll get your thoughts because it could be related to biotech. Organon. This is that company that
isn't it like 3D organs? Am I correct or am I wrong? Was this the 3D organ company?
There was another one that had a company name very similar to Organon. I don't know if this is it. I don't know if this is it.
Global Healthcare. I thought they were doing 3D printing on organs before, but maybe I'm wrong.
Are we thinking of what was the other one? Organogenesis. That was the other one. I think that was the.
Maybe that's
the one. Okay. Yeah. Anyway, OGN this morning. Some news. Sun Pharma, which I believe is a South Korean pharma company, will buy Organon in nearly a $12 billion deal. I see 14 cents per share in shares. I don't know if this is a cash deal.
I think it is a cash deal. And what was the takeout price?
$14.
They are like ruthless with the risk arbs are really giving big discounts on cash deals, like in some cases, except on EA, which doesn't make any sense to me at all. But I mean, you're talking about an 80-cent discount on $13 stock. I mean, it wasn't even a huge premium they're paying, so they think there's like trust issues here or whatever. I don't think so. So if it's $14, if it is cash deal, maybe I'm wrong. Maybe it's not a cash deal. But that
Let me just click. I got the press release here. I might as well.
Yeah, that seems like a pretty deep discount.
$14 per share in all cash deal. 11.75 billion enterprise value.
Like they get these deals through, fairly quickly usually. Like even if it was a year to get the deal done here, I mean, 80 cents on a $13 stock is way better than the time value of money. We could just do the 0.8 divided by 13. I mean, just doing the air math here, I'm like, that sounds like 5-6%. I mean, they get the deal done faster, and that's pretty good. I'm actually surprised it's not trading like up at 1350, 1360. So maybe there's some risk. I don't know the company. I didn't even know what they did. So it's hard to like fundamentally say, this doesn't make any sense. But maybe with a little bit of research here, if you want a spot to park some cash, maybe you do pick up that 80 cents.
Tim Quast is in the background. Tim, can you hear us? Give it. Yes, Tim is ready. You want to go get Tim?
Oh, yeah.
Triple D? Let's go.
Love me some Tim.
Here we go. Good morning, Tim Quast.
Hey, good morning, Brent and Dennis. I love me some Brent and Dennis. Good to see you.
Very nice. There are two people who live the dream. One is Joel Elconin as he goes on these nice vacations all the time. The other is Tim Quast. And where are you in the world? It's like, where's Waldo? Where in the world is Tim Quast?
I'm in Denver, Colorado.
Okay, so
I'm actually at home for a change. Yes. Yes.
You know how to live it up, though. He does. He's skiing. He travels here. He travels there. Tim Quast knows how to do this life. Next life, I'm coming back as Tim Quast. How are you, buddy?
Go well, thank you. Yeah, I mean, this time my departure for the sea was the opposite signal. Usually, it's a death knell for the markets, and instead I left for the sea, and the markets skyrocketed. So I'll be leaving again this week.
Send you back. When are you leaving?
Letting you know.
when are you leaving?
I'm headed to Nashville on Wednesday. Oh, okay. So it's not as exciting as St. Bart's, but I like Nashville.
Nashville's cool though.
Yeah, Nashville's a great city.
Agreed.
Great city.
Yeah.
Had a lot of fun down there. I've been there a couple of times. Tim,
well, you remember it, and that's good. That's good. That's a good sign.
Let's talk the markets here. I mean, this is the market that is so resilient now, completely ignoring all war headlines, completely ignoring elevated oil, running on AI. And I want you to bring up, if you can bring up market structure edge here and talk, because we like to jump into supply and demand. I've got lots of questions for you regarding hardware and software. I've got lots of questions for you regarding the overall market here, because it's been a pretty incredible 3 to 4 weeks here for the S&Ps. We went from the gutter where we were almost down 10% to new all-time highs. It feels like in a heartbeat. And it feels like this market only does V bottoms now. It used to always, it slowly climbs way back. It's like we used to always say down like an escalator, up like an elevator. This market's almost the opposite. It's like down like the escalator, up like the elevator here. And that's where we are again. We've come back. S&Ps are new highs here. So let's start, maybe with the big picture overall here, and then jump into some smaller names.
Okay, and I see you're getting I see you're getting, thanks for working hard backstage there, Tim. Are you cool if I put your screen on screen right now?
Yeah.
Cool. Here we go.
He's cool. I'm answering.
Yeah, go for it. Go for it.
Okay, sweet.
So,
thanks for
I agree with you, Dennis. I agree with you, Dennis, and it's a reminder to everybody that fundamentals are an input into flows, but flows determine how the market behaves. I will say to public company executives, what is it that creates shareholder value? And they'll begin to talk about, executing on a business plan and, beating and raising all these things. I said, no, money does. Money creates shareholder value. And one of the inputs into flows is fundamentals, but it's the smallest input in the market now. So you have to begin with that premise that when the market does things that you think don't reflect fundamentals, it's not that you should root around to try to figure out some fundamental explanation for it. It's better to recognize that the market is driven by its principal purpose. And what is its principal purpose? Well, you can look at what the money is doing. It's not that complicated. If the notional value of derivatives is 4 times the size of the notional value of equities, then it's probably arbitrage, right? So what does a market that is driven by arbitrage do? It mean reverts. It has V recoveries. Why? Because you have exposure to the underlying equity and you have exposure to leverage and derivatives, and you will be constantly adjusting them. And so long as there is a flow of money into the markets, you are going to see crazy things happen. So if you look at the up-down cycles in the market, if you're looking at my screen, I'll pick one here. Mega caps. Sure. There are 136 stocks that have 100 billion or more of market cap. By the way, 3 days ago it was 144. So that's kind of an interesting thing. Wow. So here is demand. So demand on a 10-point scale is starting to decline, and here's supply. But the cycles from tops to bottoms tend to run 8 or 9 days. In this most recent swale and recovery, it was 20 days, both directions. I mean, it's an extreme outlier. This is the 20-day decline. See, from options expirations in February, those 3 little squares, to options expirations in March, those 3 little squares, 20 days. And then 20 days up to these 3 little squares, which were a week ago. That's a tremendous outlier. So number one, traders recognize that is an abnormal move. What tends to happen is that we revert to a 8 or 9 day cycle. And so if we're topped here, there's a likelihood, statistically, probabilistically, of 8 days of declining demand in which the market will move sideways. Declining demand does not cause the market to go down. But the takeaway is that the market is driven by, as you said, Dennis, this is how AI behaves. AI extrapolates and extrapolates and extrapolates. You give it data. We use it all the time, right? So we're Copilot users. We have a corporate subscription. We use it all the time for statistical analysis. This is how I get to some of these figures I share. Right? This is what we're doing, right? Nice. So we know statistically what's likely to occur. These are cycles. There's a bigger question, but we could come to that at the end. The reason this happens is because the market is mathematical. The prices are set by machines. The money runs on models. And those conditions work until the opportunity to consume the return is gone. It's that simple. And yet it's that complicated too. It's very difficult, isn't it, traders? Because you put in a stop and then you get stopped out and you think, well, I made the wrong decision. Then the market goes up and you think, am I missing it? And you chase it and then it dives on you and you think, oh, I made a wrong decision again. Look, I make mistakes all the time. I don't get this right all the time at all. I understand it doesn't right where we all make mistakes, but I think it's important to understand that the market is not fundamental, which is why you see these things occur.
Okay, I got to go selfishly start to ask you about a few names. I'm going to selfishly ask you about Micron because I just took a position in it last Thursday here. It's moving up here. I like the breakout. I like that it's a hardware name. So maybe on this case, it is moving on a little bit of fundamentals here. But give me your thoughts here. Can this rally continue in Micron, or should I take the quick gain and move on?
Well, so from a demand supply perspective, it's good. It's getting long in the tooth. If you figure that Micron spends on average, let's call it 6 days at 10. If you look back over the last 3 years, how many of those cycles would there be? At least 50 of them. Okay, so at least 50 cycles of up and down. And if it spends 6 days on average at 10, and it's now been 1, 2, 3, 4, 5, 6, 7, 8, 9, you know that cycle is long. But if you look at this statistically, demand at 10 with declining supply is the textbook way that you produce returns, right? Is exactly where you want to be. I would say own it above 5. When it pops above 5, own it because you're going to get all these gains. And when demand begins to deteriorate or supply rises, then you leave. And it doesn't mean you're going to capture all the returns, but it's a pretty good way to do it. And you could do it this way. Like if you just hit this and I want to go over here and say, well, what happens if you own it 5.5? Right? Just at 5.5. Well, if you bought and hold it for 90 days, you'd have made 109%. If you just owned it 5.5, you'd only own it for 65 of ththose 90 days. Not great. I mean, the Micron is a momentum stock that doesn't function well as a 5.5 trade. You want to own it at 10. But what you conclude is that cycle is getting long. That's it.
Continue on to this theme here, and I don't know how much you like to give your analysis ahead of an earnings report. We're going to get Seagate tonight. STX Tuesday is Seagate, and let's just take a look at quick supply and demand heading into that report from Tuesday night. Again,
here you have awesome demand, long cycle. Just using that that average of, call it 5 or 6 days. The big tech is less than that. We'll come to that in a second. But that's long cycle at 10. Almost 10 days. And here's the supply side. Supply side is rising. Now, what does that mean? This is short volume. What does that tell you? Well, it tells you that you could almost call it credit or leverage. There's leverage in the market. The problem is if demand stalls, this leverage gets marked to 0 and the stock declines. So all things being equal, again, I play the probabilities. That's what I do. I say, well, what is the probability that performs well? It's less than 50-50. Doesn't mean it won't skyrocket. But I would look at this and say, based on just, always using the data to make a quick decision, I would say, I'm not buying that ahead of results.
Brentster, do you want to pop into another earnings stock there?
Yeah, sure. I mean, what other big earnings are you looking out for this week, Tim?
Let's look at the big 5. Right. So Wednesday, Thursday, we've got 5 big stocks, right? So let me give you this because I'm prepared for it. So
nice. I love preparation.
So let's look at Meta. And here's what we know. Meta over the trailing 3 years has a propensity to spend 4 days at 10 every time it hits 10, and it doesn't produce any returns there. So statistically, it's done exactly that. It hits 10. All the returns come from buying when there is low supply and rising demand. When you see those conditions, well, there's your opportunity. When it gets to 10, after 4 days, now you're extending the cycle. You know that statistically it's long, but the whole market cycle has been long. Now look at this. On Friday, demand declined, dropped from 10 to 9. Look, anything above 5 is still excess demand. But if I just look at this very quickly and say, I never buy declining demand into earnings, I just don't do it. It doesn't mean that it can't work out. But I look at demand declining and high supply, the highest in this entire 30-day period that we're looking at. Look, it's not terrible. It's 50% of the volume. The market is half long, half short all the time. That's what it is, okay? And there's a reason. All the stock is owned. I mean, if you go to buy a stock, where's it coming from? Right? If 100% of the stock in the market is owned by somebody, either institutional investors, retail investors, or insiders, and you want to buy a big position, where's it going to come from? Well, I'll tell you, 9 out of 10 times, it comes from Citadel, who shorts it to you. That's how it happens, right? So when there's short stuff, that has to be squared at some point. So your buying that buys artificial supply can drag down the performance of the equity. It's ironic, but it's true. But I'd look at this and say, no, thank you. All right, so let's go to Alphabet. I'm just going to use the non-voting. So same condition, right? It's had a long extended run. It averages less than 4 days at 10, and it's been there for 9 days, right? So tick down, high supply. The time to buy it is low supply, rising demand. Again, I'd say I'm not going to buy it. It doesn't mean you can't.
Don't like the tick down.
I don't like it, right? Microsoft, much better, right? Microsoft spends 4 days at 10 on average. It's 4 days at 10. Right? Yeah. That's still good. And supply declined. I will take Microsoft. I would take that stuff. Okay. Amazon. No, thank you. Again, long run at 10. It's a great stock. I mean, if in the long-term portfolio, you should always own stocks that at least at 5. Then you know you're always owning excess demand. But again, buy low supply, end of March, good demand. That's how you get returns. Here, I don't like this. This is credit. There's credit over extension. If anybody stops buying, the stock will fall. Okay, we'll just know that risk exists. Apple is awesome. I mean, Apple just got to 10, spends 4 days there on average, and supply is declining. I'd probably buy Apple ahead of earnings. That's on, is that Thursday? Yeah. So that's it, right? So then we come around to broad sentiment. We'll back to where we started. But that's how you look. You can do that very quickly.
But on your strategy, do you take them into earnings? Like, are you comfortable enough if the supply's at 10 to go into an earnings report here? Or is it like, like I might do ahead of earnings? Like, because obviously earnings can be a coin flip.
Yes, they can.
Something at 10, do you think there's enough information priced in here that you take a shot?
Well, I'm glad you asked that question. There's a qualifier with Apple. What is the problem? What is the problem with Apple reporting results April 30?
Last day of the month.
Right. As Ben Stein would say, anyone? Right? So a correct answer, Brent. It's April 30 is the last day of trading for the month. Trillions of dollars of index options expire and reset. I mean, it is a colossal event. SIBO created these derivatives in 2014, 11 years ago, in response to the explosive growth of passive investment. Passive money has to true up its tracking. So you get to April 30, I got to be matching my index. So I'm not going to go buy and sell a bunch of stock. I'm going to use options and futures to true it up. Well, why would you? So for Apple to report into that is a bad management decision, because it's like trying to speak over a leaf blower. Don't do it. Yeah. Move your earnings report into the new month when there is new money and everybody is trued up, right? That's where they should be. So that's a qualifier. Beware of the last trading day of the month. You can go back, investors, and look statistically, historically at the data. Look at what happens on month ends. I mean, I might be short the market month end because demand is topped and supply is rising in the broad market. So April 30, I'm probably short it. That doesn't mean it's going to be right, but I know statistically what the probability is.
And so this is coming from a guy, folks, who knows investor relations really well. And Tim, that Apple has reported on this Thursday for I don't know, 15 years at least. You would still make that recommendation, not to be trying to have a conversation over a leaf blower, even though about that historical context for Apple always reporting on this Thursday.
Absolutely. Yeah? That's an anachronistic practice by Apple that has not kept up with the times. I mean, look at Morningstar's. Anybody can do this. Anybody can go get monthly Morningstar data. We do it. And you can look at their statistical sample of the investment universe. Assets at passives now outnumber active assets 2-to-1, right? There's twice as much money running on models as there are stock pickers. When I started in the profession in the 1990s, all of the money, over 90% of the assets, were actively managed. And all of the power on Wall Street was at the sell side. So we had to construct our practices of reporting earnings around the needs of the sell side and fundamentals. Step forward now, 30 years later. I've been in this profession for 31 years as a member of the Investor Relations Professional Association. He served on the board. I'm what's called a NERI fellow, meaning I've done just about everything you can do in this profession, right? So I know a lot about it, and these practices have not kept up. You should not be doing that today, public companies, right? You shouldn't be reporting machine readable data. You shouldn't do it on options expiration dates. You shouldn't do it after the close. You should do it before the open or during market hours, right? Market hours, and it's going to change. We're going to go to 23.5, 24.5, and then we'll see. But right now, 90% of all volume is during market hours. Well, why wouldn't you want competition between the bears and the bulls? Right. You report outside market hours, you have just turned the market over to whoever's got the biggest bet, right? Look at software and semis. Doesn't matter what your results are if you're ServiceNow, which were awesome results. Right? It doesn't matter. All the bets, crazy. If you say software, if your press release that you put out on the wires, which is machine readable, says this is an earnings release and your software, you're going to get shorted. If it says semis, you're going to get long bets.
What changes that? What changes that narrative? I know I'm going along on the tooth here, but what can change that narrative? Like to get people to stop betting? Like you got Michael Burry out there fully, trying to short semis. It's always the contrarian at heart and trying to call the top on everything. Right. Buy all these puts on the semis, and what stock did he buy? I don't even remember which one he ended up buying. Do you remember, Brent? Michael Burry?
Was it Microsoft?
Was it Microsoft?
I think it's still.
He's going and trying to make the trend change. But what can change? We know Michael Burry isn't powerful enough to do that. What can change the overall narrative? Like, how does it change?
So for public companies, there are two things. A, stop supplying machine readable data to the wires, and B, stop calling it an earnings release. None of those are necessary. Now, it might all get tagged anyway. This is an AI question. Can you stop that? I don't know. I tell all public companies should report during market hours. It's the opposite of what we used to do when we had to give the sell side time to write their notes. Today, that does not matter, right? That's not what will determine the outcome.
Great point. Yeah.
And number two, this thing breaks. If it ever breaks, we'll get a reset, won't we? And what is the probability of that? Well, I can tell you. Mathematically, the probability of a steep decline in the market right now, in the next month or two, in the next month, 15%. But that means there's an 85% chance of mean reversion and a continuation. 2 months, 28%. Look, there is a risk, but I'll conclude with this. Let's back up 1 year, right? So it took us a full year from a demand cycle. See the green part of the graph? Check the green line. It never dropped below the green line. Never done that before. This is the longest period ever. So see, it broke below the green line, tariff tantrum. That was a big bottom. I levered long right there, right? Okay. And then I'm waiting for the break because the break will tell me in roughly 3 months, the market declines. What happened here? It happened at March options expirations. So now there is a probability that this thing breaks within the next 3 months. Might not. It just has historically. Now, I don't know what's going to happen. It's just math. And it's, the math is not always correct. But to me, Dennis, until this thing breaks, there is no reason for it to change, right? It works. For Citadel, Susquehanna, Jane Street, Hudson River Trading, Optiver, Tower Research, on and on. This is the most beautiful thing that has ever happened.
Awesome. Tim Quast, he is founder and CEO over at Market Structure Edge and also Modern IR. Tim, will always have you on for a little bit of extended time with Tim Quast. Thanks for joining us on this Monday and a lot of Mondays also, Tim.
Appreciate you guys. Good to see you. Have a great week. Thank you.
You too. Later. All right, Triple D, we're going right to our rating here. We had a couple ratings that we wanted to highlight, but we'll go right to the one that we especially wanted to highlight here. AMD this morning, shares were downgraded from over at Northland from outperform to market perform. I see a $260 price target, a little color via TheFly with Intel catching up to AMD, and Taiwan Semi partnering with NVIDIA in the AI infrastructure and PCs. Northland thinks competition limits AMD's gross margin expansion as R&D spending will likely remain elevated, while stating that AMD is a phenomenal company. The firm contends that calendar year 2027 consensus is likely too high. Thoughts on this call this morning?
It was holding up so well, and it was up this morning. I was highlighting. I was like, wow, I can't believe they're just shrugging off this downgrade, because there is some concerning stuff in this research. No, not that Northland's the biggest mover and shaker here, but they're respected in the industry.
Totally.
And the stock was just straight up 6 points, and I was like, really? I'm like, they're really like, I'm like, that's just unbelievable relative strength. I'm still long AMD. I'm still staying long on AMD. I'm probably not going to get spooked out on this note here, but I mean, it's overextended. We have went from $200 to $347 in, I want to count them, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 trading days. The stock is up, what is that, 75% in 16 trading days. So, I mean, if you're in it for a trade, maybe you ring the register here. I've been in it for like the last 2 years. So, I'm probably going to stick with it. I've been correct. Obviously, my average cost base of my kids' account, I think, is like $90. I think I'm in at like 130 or 140 because I added to it at one point in time. But I mean, this is one of the biggest winners of my long-term portfolio. I still think it's hardware. I still think it's all in the right places. I still believe in the company here. This does sound like a valuation call here, and the stock maybe has gotten, just a little bit overdone. Do we need a pause and a reset? Maybe, but I mean, these hardware names, once they get going, they're hard to break.
You want to do CrowdStrike real quick, Triple D?
Sure,
you want to wrap
there?
Mizuho upgrading CrowdStrike. I'll pull up the chart. Give me just 1 sec. Mizuho upgrading CrowdStrike from neutral to outperform. What say you on this one, Triple D?
I'm going to interrupt you, actually, and going to go to Poet, because we got Poet breaking news here. I did not see this morning, but Poet at 8:58 comes out with the news. They are losing a Marvell purchase order. So we had rumors last week, I think this was, about this order, and they were talking about this, and this was a stock that really got propelled last week. POET stocks went from $8, $15, doubling in 3 days. This morning with the potential loss, and again, we don't know. I don't know if this. Oh no, Poet actually provides the update. I think
this is it. Yep. This is confirmed today.
Give me the details here, Brent.
Today, so Poet press release today announced the cancellation of all purchase orders received by the company from Celestial AI, including the ones for initial production units first disclosed by the company on April 25th, 2023. Marvell, which acquired Celestial AI, provided written notice of the cancellation to the company on April 23rd, 2026. As the basis for the cancellation, Marvell indicated that the company had made disclosures of information related to the purchase order and shipping information in contravention of its confidentiality obligations. Oh no.
Amazing. The stock was trading at $17 earlier this morning. We're talking about a stock at $11 now, so just crushed if you're chasing this thing. And that's the scary thing about chasing. When there's all that air below, you can't have a negative headline here. This is a bad one. It's a bad headline.
This is a bad one.
So,
this is like
a bad one. It's a real headline from the company. It's a bad headline. So, I mean,
cancellation.
Is there shorts in here that are probably scrambling, saying, yes, thank you for letting me cover? Maybe. But am I coming in here and being a hero on this one? Not when you lose an order like that. I'm going to just stay away. Another one that's too difficult for me, I'm just going to stay away.
This is a big double whammy, because not only are you losing this contract from, one of the biggest players in the space, but now you have question of concern about like the integrity of management. Marvell saying that the company made disclosures outside of its confidentiality obligations, and that's why they
none of that
the
sounds
deal.
None of that makes me feel all warm and fuzzy inside here. So at this point in time, we just want to break that news for you. Obviously, we're a little bit over time here, but I know there's a lot of people who've been trading this story here, POET, and today that's a tough headline. But we are in a buy the dip market here, so I'm not going to call it out. I'm just going to stay away myself.
Fee sharing one more headline. Oh gosh. Be sharing one more headline here with us, and it is on Microsoft, and Microsoft shares are moving lower here. It looks like we have a report. Microsoft will no longer pay a revenue share to OpenAI. I'm unsure why that would.
It's not moving much because Microsoft has been down all morning, but I do see the headline here, so I haven't really seen. Oh no! Oh, it just dropped.
No,
oh my God!
It's down like $10.
Oh crap! Like, as I just brought it up, and I was like, oh, I was like, I just looked at it, just like I thought I looked at it after the headline here. So holy crap!
Chat. Why would the stock react this way? Michael Fian says, end the show so the headlines stop. We can oblige.
We're trying to.
We're trying.
I don't have time to break through all the fundies on this one, but I will just say, software. You got column A and column B. Microsoft clearly falls into column B. That means I stay away.
Microsoft's OpenAI license will no longer be non-exclusive. Well, excuse me, will now be non-exclusive. That's why the stock is falling.
S&Ps are getting hit pretty hard on this as well. We obviously have to consider that a big portion of Microsoft is indeed in the S&P.
All right, folks, a little extended time here, but we're going to wrap. Triple D and I are going to go over to the STN room where we're going to get ready for the opening bell in about 25 minutes. Thanks for getting us kicked off here on the right foot this week on Pre-Market Prep. Triple D and I will be back tomorrow morning. Good luck, everyone, today.